Healthcare deal-making is, well, pretty healthy. Insurer Centene has agreed to buy managed care provider Wellcare, something we told you was possible last night. That deal adds to the flurry of get-togethers that we've seen this year. In fact, health industry mergers globally have had their biggest first quarter in 12 years. Shares of the companies moved in opposite directions. Wellcare was up 12%, Centene fell nearly 5%. It is important to note that both Centene and Wellcare have a number of things in common, including significant business around government health programs. And that could prove to be either a risk or a reward. Bertha Coombs has the details.
Centene has grown its Medicaid business tenfold over the last decade, in part through regional acquisitions. The $17.3 billion deal to buy its Medicaid rival Wellcare would be its biggest transaction yet.
Well, these are two good companies, in my opinion. You're putting them together. They're high-growth industries. They have complementary products that work well together. We've had the objective to really build our Medicare product. They have a strong Medicare product. We have a technology platform they need for their work.
The combined company would become the nation's fourth largest health insurer, cementing Centene's leadership in Medicaid safety net programs and the Affordable Care Act exchange market. And it would quickly add scale in Medicare. The combined company would have 1 million Medicare Advantage members and nearly 4 million seniors on Medicare Part D drug plans across all 50 states. What concerns some investors about the deal? Centene is projecting slower earnings growth in the first year. S&P credit analysts aren't worried about that.
With a deal this size, there's always integration risk. So we think integration risk in this case is a little bit muted than some of the other larger deals that we have looked at. Now, that's a very different question.
Antitrust regulators may raise concerns about overlap in Centene and Wellcare's Medicaid businesses in Georgia, Missouri, and Nebraska. Their combined market share tops 60% in those states.
When we look at the possibility that both Georgia and Missouri would require divestitures to meet approval, that would be something a little bit above 15% of the combined Medicaid membership. That's a lot, but I think that that's manageable, and that may not be necessary.
Investors have also seen risks in Centene's exposure to the Affordable Care Act, with the Trump administration now asking the federal courts to overturn the law in a case that's under appeal. Centene's CEO thinks the Supreme Court will ultimately uphold the law.
I've always found when there's a certain amount of uncertainty, there's a challenging environment, that's the time to act.
If approved, Centene expects to close the deal late next year. For Nightly Business Report, I'm Bertha Coombs.